Hey guys, breaking news, September 16th, 2021. Retail sales came in. The unemployment numbers came in. Don't go away. We're going to be right back to discuss that because it's making moves in the market. Okay, hot off the presses, Rick Santelli, CNBC, coming up.
Welcome back to Squawk Box. Rick Santelli here live on the CME HQ, and we are waiting some important breaking news. Initial jobless claims, well, we're expecting a number around 322,000. 332,000 is the number we arrive at. That is 22,000 more than our last look, which 310, and 310 was the post-COVID low, still may get revised. On continuing claims, hey, another handle. We went from 2.7 million to 2.6 million. So 2.665 to be exact. And that is a post-COVID low. In the rearview mirror, the 2.783 million. That was the post-COVID low. Revisions still may be coming. Philly business outlook. This is important for September because yesterday's Empire was one of the reasons rates turned higher. And this is strong as well. 30.7. We're expecting a number around 19. So second day in a row, we have some strong business areas, whether it was Empire in the Gotham, New York area, or today in the Philly area. So we want to pay attention to that. Retail sales for August, the advanced read, a surprise up 0.7. Up 0.7. We're expecting down 0.7. Here's the fly in the ointment. Our last look, lost 0.7 from minus 1.1 to now minus 1.8. We know autos are a drag, so ex-autos should be strong. It's very strong. Up 1.8 ex-autos, but also we lost 0.6 on a revision from minus 0.4 our last look to minus 1%. Ex-autos and gas, even stronger, up 2%. And the control number that gets plugged into higher up the food chain economic fundamentals, 2.5. That is powerful. Look for yields to be moving up on this, and Bund yields already have moved up. Energy prices in Europe are really moving higher, and nervousness over blackouts and factory crunches and shortages and closures are affecting their economy, their currency. The euro is at a 2-month low versus the greenback, and maybe the most important issue of all today will be monitoring how our interest rates may start to move higher from the doldrums they've been in as we start to see ongoing shortages, shipping issues, which you've already discussed, human contact business suffering, with the good news being Philly Fed and Empire might be painting a little bit better picture down the road. Becky, watch those energy prices. Stagflation is the word of the day. Back to you.
Yikes. Yeah, natural gas prices especially. Hey, Rick, the retail sales number stronger than anticipated. I mean, I take that with my biggest takeaway from this last conversation we just had with the director of the port, that, look, it's not that people are sick. It's not that this is too much of a backlog. It's that we are buying so many things that we just can't import this stuff quickly enough. It's a huge load of things, setting records in terms of the containers that we're bringing back in here. That, combined with these retail sales numbers, just tells you again how flush the consumer is right now.
Yes, and I think when you look at the rate of change and the fact that every category today had bigger revisions lower last month, gives us almost a bit of a wave of energy here as these much stronger numbers appear. Now, do remember, this is the advance, so in a couple of weeks, we're going to pin it down a little bit more accurately. But yes, Philly Empire retail sales are very good news, potentially breaking the conventional wisdom that everything out there is not going well and that the human contact issue with the variant is all we're supposed to pay attention to. It is important, but it certainly looks like there's some good news. But you really have to watch out for energy. Many of the policies that are putting Europe behind the 8 ball are being adopted in the U.S. as well.
Okay, so let's break down his data real quick. I wrote down one of the things right at the end. Becky said something about the consumer is still flush. What does that mean? It means a lot of consumers still have a lot of money, excess money, because of the forbearances and the student loan things. Guys, it's going to start to deplete out of the system. So don't freak off of these numbers. That's one of the first thing I want to say. But the one news that came out is continued claims. New claims, I still say they're going to subside, but continued claims dropped. Okay, so that's basically going down the path that I was stating before. So let me lay out my plan here and why I think what's going to happen is going to happen. We're going to have higher rates. So if you like today's rates, lock them in. Okay, so they're going to be here or higher than where we are today. So are they going to get better? Really, no. But we can monitor for some dips, in the market every once in a while, like Bitcoin. If you watch Bitcoin, one day it's up 10%, next day it's down 20%, and so forth. That's what we try to do here. We try to monitor this for you guys. But one of the things that I wanted to really discuss is continued jobless claims subsided. Okay, so that's good news. Retail sales, it's going to go away because when people get back to work and the forbearances end, and the student loan deferrals end, and blah, 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 that's what you're gonna see. So let's see the reaction that we had in the market, and then I got some ideas for you guys on what I would be doing. Okay, so the retail sales posted surprising gains. I didn't really monitor this. I really didn't care about this. It's crushing the markets right now. And as Rick Santelli says, as the economy looks stronger and stronger and stronger, rates and yields are gonna go up. Okay, so what's that doing with the mortgage rates right now? Well, it's pushing it up, down 20 basis points. As you guys know, when the number's down, rates go up. There's an inverse correlation here. So when this number's down, that means the bond price for the mortgage-backed security, the price is down, thus turning the rate or the yield or the mortgage rate higher. Here's how it works for those newbies is, let's say, for example, I'm investing in a bond, and mortgage-backed securities are a bond, and I'm going to discuss mortgage-backed securities a little more thorough here in a second. But how bonds work is, think of it this way. You have a bond. The maturity price for next year is $100, okay? So if the price is high, okay, let's say I paid $100 for that bond, next year, I give you my coupon and you give me my $100 back. What's my rate of return? What's my yield on that at that high $100 price? 0. Okay, because I invested 100, I got 100 back. All right, that's how that works. Now let's see when the price drops. So now I pay $50 for that bond. Next year I give you the bond, you give me $100 back. What's my rate of return? My yield? 100%. So my mortgage rate would be 100%, up from 0. Okay, so when I paid a higher price at 100, my yield was 0 or my rate was 0. When I paid a lower price at 50, my rate is 100. So that's how bonds work. So that's why we follow this market right here, the MBS market. What is the MBS market? Well, basically, it's the bond that trades on Wall Street that is the component or the biggest component or factor of your mortgage rate. Okay, so we've clobbered and dropped through all of our support levels. I don't think this is going to hold. Okay, so I will post at the end of the day to let you know where we are. We're down 19 right now, but it's early in the day. So as this blends through the system, and also again, I don't know if you paid attention when Rick Santelli was talking, he said these numbers will most likely get revised. So I'm expecting this to be a blip in the radar, and we should be still trading right around this range, at least the 101.3. So look at the yield up here, 101.11. I'm expecting this to get to 101.4. Okay, we were almost there yesterday, and then this news, which shouldn't really be a shocker to the system, it was a little bit with consumer spending, but I can almost promise you the next round of this news is going to show numbers that aren't so good, and this number is going to get revised. So I'm not knee-jerking right now and locking in people because we blew through all these support levels quicker than we should have. So it's basically a knee-jerk reaction. What was the reaction? Well, let's see, initial jobless claims actually went up a little bit, okay? But continued jobless claims went down. That's what I'm focusing on right now, okay? Because there are jobs out there, guys, and I keep getting, people posting, well, Dan, they're just jobs that people don't want because of the low pay. Guys, it's a new technology world out there. So you have to be trained to take these jobs. If not, you're going to be, I hate this word, but if you're an unskilled laborer, You're going to have a lot of jobs taken from you by technology. So you're going to have to get more acclimated with how the world's going right now. But like I said, I did talk to 2 manufacturers last weekend. They're actually friends of mine. And they're like, Dan, we can't find, and we pay kind of top dollar for this. We can't find people to work. And I don't get it, but that's what I'm trying to wrap my head around a lot of this stuff. Retail sales were robust, but let's look at X Auto. Way robust. So there's a lot of things that I'm going to dig behind these, but this was breaking news. I wanted to get out to you to show you where are the strengths in these numbers that just came out. I'm even concerned about that. I want to see where those are. What was the intraday number? How's this look so far today? Well, it came out and then the news came out and everything just plummeted. But the nice thing is we stabilized. We're stabilizing right through here and we got a lot of green candlesticks that's bringing us back up. So I'm not going to say we're going to pick up and end today at 0, but I can almost assure you, my assumption is we're going to end, this is going to be the low of the day and we're going to take a run up from there. So my name is Dan Frio. I do the rate update every day. What I like to do is just ask you guys, if you find value in my videos, please give me a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. What we do here, we can help you refinance. So if you're looking to cash out, pay off those high interest debt credit card bills, you're in a forbearance and you just need an exit strategy, please reach out to us. We'd love to help. If you're looking to buy a house, we have realtor partners all over the country. We can help you get pre-approved within about an hour, and we can get you assigned to a realtor and get you out in the streets, and maybe you can put an offer on a home this weekend. So to find out more, just go to therateupdate.com. And it's going to take you here. All you got to do is give us a call at 844-775-LOAN. You can apply right here if you want to apply and just get the ball rolling, see how much you qualify for or what you can qualify for. But if you're watching this and you're like, Dan, I just don't have time right now. I'd like to, I don't want to forget about this. I'd love to call you guys tomorrow. Well, how about you do this? Just schedule an appointment with us. Give us the day and time that's suitable to you, and then we'll give you a call or a Zoom at that time to answer any and all the questions that you might have. So that's it for right now, guys. I'll post later today to let you know where the market ended. So be safe, God bless, and I'll see you around 5 o'clock. Bye-bye.